Hello, everyone. Good morning. This is Kathy. If you can see my screen, actually, I haven't shared my screen yet, but I want to say good morning. If you can see me and hear my voice, let me know and we will get started in just a second. Let me know, say hello, let me know where you're coming in from. Good morning, Patrick, Godfrey, Matthew. I am going to share my screen. Give me 1 second to make sure that you can also see my screen. All right, everyone, if you can hear my voice and see my screen, please give me a double yes. Yes, yes. So I know that everything is working the way that it should, that you can see my screen. Okay, thank you, Mark, Cheryl, Arton, JB, all of my friends this morning. It is certainly going to be another very busy trading week. And let's kick off by let me asking you what you're trading this week. Are you trading dollar yen, euro dollar, forex, gold, futures? Let me know what you are trading, and let me know exactly what you are looking at this morning. Okay, so NASDAQ, great. I'm sure Boris will join us and he'll talk about NASDAQ. We'll look at gold. There's so much to talk about. Index futures. Where are my Forex traders? I know from our survey that we did when we live traded non-farm payrolls that most of you, actually 70%, I believe, trade Forex. So I want to hear from my Forex traders. Of course, as Forex traders, we are agnostic, really, or we should be agnostic, meaning that we don't have an opinion on what currency pair we're trading. Instead, we're trading based upon the opportunities that the market gives us. So, that's what we're going to be looking at. And that's, what we're going to just be talking about today. So welcome everyone to Kathy's Caffeinated Market Buzz. I am delighted to have all of you this morning. And we are coming off of a very, very busy trading week. For those of you that are coming through the YouTube live stream, please log in. Those of you that are coming through the X live stream, please make sure that you click on the YouTube link because I'm going to be sharing charts, showing you my heat map, lots of fun stuff there. And if you give me 1 second, I'm just going to add in the link onto the X stream so that you can watch it live there. All right. So let's talk about how we can make money this week trading the markets. So, first off, you are taking a look at my heat map. And in this heat map, you will see, and this is a heat map that I share with you and our BK traders have access to. For those of you that are X on X, I am sharing the heat map on YouTube. So make sure you click on the YouTube link. So on this heat map that I'm sharing on YouTube, you can see that we are kicking this week off dollar bearish. Now, before I get too much into this, it's important to talk about last week and the main events affecting the dollar this week. Now, last week, of course, the big event was the non-farm payrolls report. And, non-farm payrolls, if you remember, many of you live traded this with us and we did extraordinarily well. I hit 4 out of 5 winners. I'm sure Boris had a really great session too. Non-farm payrolls wasn't great. I mean, 142,000 against 100. Oh, looks like 162,000 expected. How come the countdown is being okay, it's just me. All right. So against 64,000 expected. The unemployment rate improved and average hourly earnings growth increased. But really, the problem was this number here. Because we talked about at the beginning of the week, and that's why this Monday game plan is so important, because we talk about, what is expected. So we have a trading plan when we trade these big event risks. And I said that the number was going to be stronger because of the storm, which negatively affected the previous month. And actually, it made it worse. It was 114,000 before, and it was downwardly revised to 89,000. So now those jobs that were taken away because of the summer storms came back. But unfortunately, it didn't come back enough. it came back only 142,000 with that downward revision. So net, it's a dollar negative number. And that is why the dollar itself ended the week lower. There was a lot of volatility. It went down, it went up, and then went back down and ended the week lower. So that is the context that we're walking into this new trading week. What are the big three events for this week's trading? Now I'm going to, quiz you. What are the three main events? And you should, if you're on my X, I already listed it. What do you think we should be watching most closely? Post those in the comments. Let me know that you are paying attention. I'm going to give you 15 seconds to post. All right. So there are three main events that are affecting the markets this week. ECB, yes, saw. ECB, CPI, but not PPI. It's going to be ECB, the US inflation report, and not the Australian dollar, and the US presidential debate. This is the very first. I mean, you can't miss it. You go on to any major news feed. I would be surprised if CNBC didn't have it front and center. Let's take a quick look. CNBC. I guess, they don't have it front and center. But if we went on any other site, it would be right there. The three main events on this week's calendar is number one, the U.S. inflation report. Number two, the first debate between Harris and Trump, the first U.S. presidential debate. And number three, the European Central Bank's monetary policy announcement. Those are the three main events affecting the markets this week. And we will dive into each of them because independently, they all can have a significant impact on how the markets move because politics is just as important as economics. Although I must say the political impact usually is more short-lived than the economic impact. The political impact is usually something that has a relatively quick effect and the market kind of moves on, especially with presidential debates, especially with this one where we don't have the possibility of Biden stepping down like the last one. So I personally, we'll see, don't think it's going to reveal anything extraordinarily groundbreaking or new, but we'll talk about that. So those are the three main events. We ended that last week dollar bearish. We're starting this week actually kind of dollar bullish, but a lot of that has more to do with the dollar having sold off significantly last week and rebounding at the start of the week. This is not to say that the dollar sell-off is over, but today U.S. yields are up. And if you've learned anything from following our live streams, you should know, and we'll take a look at this together right now, that currencies track bond yields. The US dollar loves to track bond yields. And this is the most important thing that I look at every single day is I look at what are yields doing? What are stock futures doing to help understand what the market dynamics are? So you're looking at my dollar yen chart, and I'm just going to add on the US 10-year yield. And we're just going to pop this on to the left-hand side of my screen. And you can see here, the candlesticks are dollar yen as the line. And I do not like pink personally as the line. So let's just make it blue. The blue line is 10-year U.S. Treasury yields. And for those of you that are on X, if you want to look at my charts, join me on the YouTube live stream. Click on the link that's right below this one. You will see that basically with this here, you can see that with the information that we have, dollar yen is very clearly moving in sync with U.S. 10-year Treasury yields. We see this on a daily chart basis. If I zoom out, you'll see that this relationship goes, all the way back to at least a year. I mean, this relationship basically stands the test of time. But also on a 1-hour basis, which is why it's so important, 1-hour basis, we also see a very close relationship between 10-year U.S. Treasury yields and dollar yen. And so when it comes to trading currencies, it's absolutely important to take the cue from 10-year Treasury yields. So 10-year Treasury yields are up. Dollar yen started the day up, but now It's starting to give back its gains. Why is it starting to give back its gains? No surprise, because 10-year treasury yields are pulling back a little bit as well. So if you're trading today, if you're trading any day, it is absolutely, absolutely important to be watching the 10-year treasury yields, to have it on your watch list, like I do on my watch list, because it is 100% important. So US dollar is up today because 10-year treasury yields are up. Now, has anything changed? Has non-farm payrolls really, making us dollar bullish? No. Non-farm payrolls was weak. It was weaker than expected. But I think at the end of the day, what's important to realize is that if we look at Fed Fund futures, let's look at Fed Fund futures. And this is something that we also like to do on Monday. CME, Fed Watch Tool, Fed Tool. And it's the first one. So it's going to come up, and this is going to tell us what the market is pricing in for the interest rate cut later this month. So right now we're at 5.25% to 5.5%. You can see that in this target range here. So the market is pricing in a 100%, 75 plus 25, a 100% chance of a 100% chance of a interest rate, a 25 basis point interest rate cut from the Federal Reserve, and only a 25% chance of a 50 basis point rate cut. So what did this look like a week ago? If we go to the very bottom here, a week ago, the market was pricing in a slightly higher 30% chance of a 50 basis point rate cut, and a 70% chance of only a 25 basis point rate cut. So, that is something something that we are paying very close attention to. And, something that I'm watching, because it tells you that after the NFP's reports, the market is actually more confident that we're only going to get 25 and not 50 basis point rate cut. So the question is, will this week's inflation report change that view? And, we all know that. First, let's look at the forecast. I'm going to try to see if I can make this a little bigger. Good. So now it's a little bigger. So inflation is coming up on Wednesday. Apply settings. And the market is looking for CPI growth pretty much to remain steady on a monthly basis. It is looking for year-over-year CPI growth to slow and core CPI to be relatively unchanged. So, when I look at handicapping inflation, one of the main things I look for is what have gas prices done? So it's very simple. I like to go to gasbuddy.com, GasBuddy, and we go to gasbuddy.com, which shows us the trends of gas. So you just scroll to the very bottom, you go to fuel price analysis. And here, okay, so what are we looking at? We want to ignore all of these lines. I mean, we're looking at this box here. We want to look only at the green line. So green line July, the average price of a gallon in the US was $3.50. In August is $3.40. So we know that gas prices fell. Now, if you look at oil prices, let me get rid of this so we're not distracted by it. And let me just change this to regular. Oil prices in the month of August. This is the beginning of August. And this is the end of August. So oil prices, are marginally lower in August, but gas prices were lower quite a bit. And gas prices is what directly affects what consumers spend when they drive up to the gas station and they fill up their cars. So, that's exactly, why I think that inflation could surprise to the downside. Inflation could very much be weaker on a monthly basis than the 0.2%. Yes, you can argue that core CPI is much more important than headline CPI, but really headline CPI is also very important because it's what Americans are, taking out of their pocketbooks in order to pay for their goods. So there's a very good chance that inflation could come to the downside, especially since that's what Federal Reserve officials are telling us. Powell has said that, inflation has made enough progress and is moving in the right direction for them to believe that, that they can lower interest rates in September. So inflation, I think, is going to confirm that an interest rate cut is coming. But will inflation confirm it enough to justify 50 basis points? I still think the answer is no, which is why the dollar is rallying. So when we trade inflation, taking all this consideration, what does this mean? So what I think is going to happen is that if we're going to see the same reaction to non-farm payrolls than we do inflation. Obviously, if inflation comes in stronger, and I'm completely wrong, it's just going to be pure full-fledged US dollar rally. The US dollar will rally. We will see gold prices fall, and stock futures will probably stay where they are, maybe even rally a little bit, because it kind of guarantees a 25 versus 50 basis point rate cut. So if we get hotter inflation, the outcome in the trade will be easy, which will be pro dollar, and it will be sustainable for the rest of the day and rest of the week. Now, the trickier part is if we get weaker inflation data, because weaker inflation data is that it may not be weak enough. Obviously, if the number is, the market's expecting 0.2, comes in minus 0.1, that's going to be terrible. Year-over-year CPI comes in 2.4, that's going to be terrible. Dollar is going to sell off aggressively, and we're going to see gold prices rally. We may even see stock futures rally, because it means we may be getting a 50 basis point rate cut. The problem is if we are somewhere between, like exactly at 0.2 in line, or just at 0.1 in terms of the growth. If that's the case, that's when I think we will see exactly what we saw on Friday, which is an initial dollar decline followed by a dollar rally, and then, probably in this case, probably a bit of stabilization with a bias, I think, to the upside, because I think a small bias. I think that if we get some mildly weaker inflation, it may not be enough to really boost those odds that we just looked at from 25% of a 50 basis point rate cut to anything meaningful. And if that's the case, we may not get too much of a sustainable rally. So while I am bearish dollars in the front of the week, depending upon how inflation goes, that could be a very different outlook towards the middle and the end of the week. Okay, so next thing that actually happens before the inflation report. So the inflation report is on Wednesday, and the presidential debate is on. The presidential debate, the U.S. 2024 U.S. presidential debate, is happening on Tuesday evening. And this is when we could have a lot of volatility during the Asia session. So we've got to tread carefully. Debates do not normally have significant impact on the markets. And, typically it's, doesn't, typically the market really doesn't, they talk about caring about it, but they really don't care about it all that much. And, but, it could be different, right? Because, when we had the last debate between Biden and Trump, Biden did so terribly that, that it did move markets. After after the debate and Biden's poor performance, we actually saw, I'm trying to figure out exactly, I remember which date it was that they had, I think it was, which debate they had the last debate. But what I do remember is that stock futures, as well as the US dollar, rallied after Trump was clearly the victor from that debate. So depending how things go on Tuesday evening, the markets can move as well. Now, Trump is widely seen to be more pro-business. And so if, he comes in strong, that's probably going to be positive for stocks, and stocks could certainly use it, because the Dow, looks like a double top. The NASDAQ has come down quite a bit. So September is supposed to be an ugly month for stocks. So if Trump wins the debate, then we could see, stocks rally. And what's interesting is that the US dollar also rallied after the last debate. Even though Trump favors a weaker dollar. He's one of the very few presidents who just come straight out and said, we need a weaker dollar. But I think it was more of a risk on move. if Harris wins the debate, we will probably see, and of course, it has to be a clear victory. It can't be like a tie. If it's like, they both came in strong or they both came in weak or nothing really new came out of the debate, then the reaction will be very limited. But if we have a situation where Harris is the clear victor, then what should happen is that stocks should sell off, and dollar will probably rally against some of the other major currencies. Maybe not so much dollar yen, but probably against some of the other major currencies. Thank you so much, AdBox. Let's look. June 27 was the Biden debate. Thank you so much for doing the homework for us. So we're going to look at stocks. Dow. June 27. So this was stocks rally. June 27th. Really, the debate was on a Thursday. Okay, I'm going to assume you're right, even if it's not. So June 27th, it kicked off a stock market rally. It rallied that day off, and it kicked off a stock market rally. And June 27th, let's look at Euro first. June 27th. Okay, so this is June 27th. So actually, I was wrong. The dollar sold off. So the dollar sold off, which is in sync with Trump's policies. Trump is anti-dollar, and dollar continued to sell off. And let's just check dollar yen. Dollar yen, June 27th should be up over here somewhere. So I guess maybe when the dollar rallied, it was really just against the yen. This is June 27th. So it was a risk-on move. So basically, it's exactly what I said earlier. If Trump comes out the winner, it's going to be a risk-on move. Dollar will rally against the Japanese yen and sell off against the euro and some of the other higher risk currencies. If Harris is the winner, then stocks will sell off, and then we could get a risk-off move in equities that will carry over to currencies. So that's the way we've got to frame our thinking for the debate. Or it could be, pretty much a tie and there's no clear victor, at which point we probably won't have much of a reaction. So the first event risk we have this week is going to be the U.S. presidential debate. And then secondly, we have the U.S. inflation report. And then that's Tuesday night, Wednesday morning, and then Thursday, we have the ECB rate decision. You can see that my outlook for euro right now is neutral. Why? First off, the ECB is widely expected to cut interest rates by 25 basis points. That has been completely discounted in the markets. But I want you to take a look at this. What's really interesting is that, actually, I'm not going to show you my table yet. I'm just going to first share that the ECB is widely expected to cut interest rates by 25 basis points. But ECB officials have been sounding wishy-washy about what comes next. Should they cut interest rates and then move to the sidelines and not cut in October and then cut again in November, December? We don't know, because they've been sounding kind of non-committal about what they're going to do next. So I don't know. I'm going to share my ECB table here. So before every single rate decision, and I don't know why it keeps on getting cut out. Let me try to remove the banner. Here we go. Before every single ECB rate decision, what we typically have is I typically put together for all of you how we're going to be doing this for the Federal Reserve meeting next week. So make sure you come back for a Monday live stream next week, because we're going to look at the table on how the economy changed from one meeting to another. And, this is basically the process of putting yourself into the shoes of the central bank, thinking the way the central bank thinks. So taking a look at this table, as you can see, without even looking at each individual aspects, there has been more deterioration than improvements in the Eurozone economy. And for those of you that are on X, make sure you go on YouTube live stream, because that is where I am sharing my table. You will see there's been a lot more deterioration than improvement, a lot more euro bearish. Eurozone retail sales is down. Eurozone consumer confidence is down. Labor market activity is mixed. The inflation measures are down. The trade measures are down. The IFO measures are down. The ZOO measures are down. DAX is down. The German bonds are down. Pretty much everything is down. Now, of course, it's mostly led by Germany, the largest region in the Eurozone, and not so much France. France did fantastic after the Olympics, and those numbers are boosted by it. So taking a look at this, I think that the ECB should be cutting interest rates in September, cutting interest rates in October, and cutting interest rates in November, and that they should, rather than sound non-committal, they should cut and give us dovish comments. So the market is not expecting that. The market is expecting, basically the ECB to cut interest rates and then sound non-committal. But I think they're going to cut interest rates and indicate to us that more is to come. And so I think the euro I'm euro bearish, but I'm neutral bearish because this is a big rate decision. And the reason why you're looking at my BK Traders heat map and showing neutral is, we still don't know exactly what the guidance from the ECB will be, but it's neutral bearish in my opinion. I think that based upon the table, they're going to cut by 25 basis points, and Lagarde is going to tell us that inflation may have been a little sticky, but they need to remain vigilant about future rate cuts. And so moving on to sterling, this is also an important week for sterling. We have UK employment, we have UK jobs. And unlike the ECB, who is expected to cut interest rates by 25 basis points, the Bank of England is not expected to cut interest rates at all this month. And before I continue, I want to remind you, make sure you stay on after I do the market outlook, Boris is going to be live trading with you. So make sure all of you stay on, because this is going to be a very exciting session. So if you think about it, taking a step back, we have the Federal Reserve expected to cut interest rates this month. The ECB expected to cut interest rates this month. The BOE not expected to cut interest rates this month. And this week's data, the jobs report, could be surprising to the upside, because according to the PMIs, we had stronger manufacturing and service sector activity. So that should tell us that that the UK is not doing as terribly as the US or the Eurozone, and that that sterling should be trading higher against the other major currencies. Now, as for Australia, we don't have much going on for Australia. We had Chinese inflation data yesterday. Those numbers came in weaker, but at the end of the day, with the RBA, they met last week, and Bullock spoke last week and basically said that they need to remain vigilant on inflation. So they need to remain vigilant on inflation. And so Aussie should be trading higher. But you can see I am bullish Aussies. Sorry, I'm neutral Aussies, because Aussies, have been trading purely on, number one, what the US dollar is doing, and number two, risk appetite. And it will continue to trade on these two things. So it's doing nothing but taking its cue from the US dollar. And that will continue to be the case this week. Canadian dollar. We had very, very weak CAD data last week. And the Bank of Canada, they cut interest rates and said more is to come. So we had a lot of weakness in Canadian data. And the jobs report, the full-time jobs were terrible. So we have weakness in the Canadian labor market as well. And IVPMI on Friday. I mean, this is all Friday's data. You can see came in very, very weak. So IVPMI came in 48.2, contractionary. Really bad news. Weakest number since October 2023. So very, very weak number for the IVPMI. And CAD jobs, the headline number was slightly weaker. They don't break it down to full-time, but if we look at one of the other calendars, you'll see that full-time jobs was very, very weak. So I remain bearish the Canadian dollar. And then the Kiwi dollar, we have nothing going on for New Zealand this week. So Kiwi is going to trade exclusively on US dollar flows, as well as the market's appetite for risk. And, Kiwi is one of the weakest currencies this morning because the dollar is up, and for no reason other than that. I'm neutral to Swiss franc, I believe, and we saw some seasonal trends that show that September is one of the weakest months for stocks. And for those of you that have not yet watched my last video that we published on YouTube on the tips for trading, if we just click on videos, 3 essential gold forex trading tips for September, I show all of the seasonal patterns in this chart, in this video. So make sure you watch that. But September is typically a very, very weak month for stocks. And if that's the case, we should have the yen rally, the Swiss franc rally. But I think that the yen is probably going to rally more than the Swiss franc. The Swiss franc are more neutral. And I continue to look for a carry trade unwind in the month of September. So this is basically what we're looking at. And it's kind of reinforced by the calendar this week. If we take a look at the calendar, you'll see last night, and actually let me change this, the 8th to the 13th, you'll see that last night we had Japanese GDP was revised lower. Japan is definitely not doing as well as many people anticipate. Chinese inflation data also coming in lower. And, we have no data today. Tomorrow, we have UK labor data. And this is where the number, I think, could be stronger because both the PMIs reported actually job growth in the latest month. We have BOC Governor Macklem speaking. And then on Wednesday, we have UK GDP revisions. That's usually, it was interesting, but it's not a huge market mover. The main focus will be US inflation. And for those of you that join us late, we talked a lot about what we expect for inflation. So please make sure you listen back to the beginning of this stream because it's talked to you about how inflation is expected to be weaker, but that may not be the best way. But I also outlined the 3 ways to trade the U.S. inflation report. So make sure you watch back to the beginning of the stream. And then nothing really for the rest of the day. On Thursday, we have the ECB rate decision, and they are expected to cut interest rates. And then we also have PPI. PPI is pretty much going to be a non-event, in my opinion, because CPI has already been released. ECB will be the main focus on Thursday. And then we have New Zealand Business Manufacturing Index. And then on Friday, we have, just Eurozone industrial production. So really, it's Tuesday night, Wednesday, Thursday. That's going to be the main big days for the markets. Taking a look at the charts, let's see where we're at. Let's start off with Euro. Let me remove these drawings. Euro looks like, Euro's below the 20 SMA, and there is definitely some support level. I'm not sure if we have a fib support here, but we broke below this 23.6% fib. And so on a technical basis, it does, there is clearly some support level happening in Eurodollar somewhere around this point here, I would say. So I still think Euro is headed lower ahead of the ECB rate decision. And so it's below the 20 SMA, it's below a fib retracement level. And I think in the near term, if we break below this low here, first of all, I think we're going to test this low 110.26. And then I think we're going to test this 38.2% fib. Now, of course, we have a lot of big event risks, so we'll see how that plays out. But, that's obviously going to play into that. Sterling, on the other hand, you can see it has not broken below the 20 SMA, which is the gold line. It still looks like it's trending lower. And, it did make a new, I think, 3-week low. So because the dollar is rebounding and this week is really going to be about markets demand for US dollars, it could still weaken. But, Euro pound, I think, is probably going to head lower. So I'm going to be a seller of Euro pound if it goes into this region to 84.50, anywhere between 84.50 and 84.60. Dollar yen is finding a little bit of support here. We're going to zoom out in a second. So dollar yen is below many of the moving averages, all of the moving averages, except for the, I'm not sure what happened there. Why am I oh, here. There we go. I don't know why my screen stopped sharing, but we are below all of the major moving averages. And you can see that we basically have dollar yen still in the downtrend, but I'm going to pull up the fibs. So give me 1 second to pull up the fibs to show you where we are at here. So we don't have real support in dollar yen till 139.20, and I'm gonna draw one more fib here. About between 139.20 and 140.50, which actually makes a lot more sense because this is where we also have this swing low. So 140.50 is really the support level in dollar yen. 144.60 is the resistance level in dollar yen. And that's consistent with everything that we're looking at. So right now, in the near term, I think that we could rebound to test 144.50, which is generous. It's 150 pips from here, which is a lot of opportunity. I think we could test that on just a rebound basis before it probably ends up moving lower again. But in the near term, I think we're the upside for a little bit of additional rebound is on a technical basis is more likely than a sell-off. Dollar Swiss is already showing a bit of a bottom here. So I think we'll see a little bit more of a recovery. Aussie dollar, clearly double top happening in Aussie dollar. Now, we do have a lot of moving average and Fibonacci support right at 66.40. So if we get below 66.40, it's going to 65.80. So it's natural that bounces here. But I think the path of least resistance in Aussie is going to consolidate, maybe rally, and then maybe retest those bottoms. Kiwi also moving lower. Kiwi definitely looks weaker than Aussie. I'd be more of a seller of Kiwi than Aussie for a move down to 61 cents. And then dollar CAD. Dollar CAD had a really strong rally on Friday. It's pulling back a little bit. It's just going to be a regular inside day, and I think it's going to head higher. But of course, it needs to take out it needs to close above the 200 SMA. And if we close above the 200 SMA, we can get a much more meaningful move higher. Now, taking a look at gold before I turn it over to Boris, you can see that gold is just in a wide consolidation. Unlike all the other major currencies, which have much more exciting moves, gold really is stuck in a range. As much as you want to dissect each blip in the gold radar, it is really stuck in a range between 25, 40 or just underneath it and 24.75. And I think it's going to continue to move in this range because the CPI report is really not going to reveal anything significantly new. September is typically a very good month for gold. So on a seasonal basis, it should, break the highs or at least hold firm and maybe move upwards. But it'll depend a large part on what happens this week, as well as the Federal Reserve's rate decision next week. So let me invite Boris to join us, and he'll continue to share his thoughts on gold, talk about how he's going to be trading NASDAQ and gold and trading today with all of you. In the meantime, if you have any questions, please let me know. For those of you that are asking, what is the zip trade? The zip trade is basically, if you take a look at this chart, let's see if we have any recent.
I've actually, for those of you who are asking for zip trade, I've actually put in the video to zip in chat. So I'm going to do it again. I'm just going to do it again. Hold on a second.
Okay.
In chat, there's a video that says Kathy Explains Zip. It's on YouTube, so you can watch it there, and it can be quite good. Guys, I just need to figure out my lighting for some reason is
okay. I'll let you do that in a second, Boris. But so the way zip works is that when the background is red, it means the longer term trend is bearish. When the currency pair is trading below the indicator line, it means the shorter term trend is bearish. And when you have a white candle forming, which is exactly what dollar yen is doing right now, that means it needs to close, of course. It means that you have a sell signal forming. Now, so dollar yen is attempting to form a sell signal, but it hasn't closed in the sell signal. If it does confirm that it's formed the sell signal, then that would be a signal to sell. Now, we only trade this during specific times of the day, like the Asia Open, the early US market open, and we only trade at specific days of the week, which means that typically, I don't trade Mondays, but we trade Tuesday, Wednesday, Thursdays, and Fridays. But we also don't trade ahead of NFPs or CPI. We only trade after NFPs and CPI. But take a look at the video if you want a more detailed explanation on how ZIP is traded. We, have had really good performance with ZIP. Last week, we haven't had a losing week in, at least I think 13 or 14 weeks. So it performs very, very well. But the key to its performance is understanding the fundamentals and also being selective with the trades. So if you want to actually not just learn ZIP, but trade ZIP with me every day, you can take us up on that YouTube offer that is in the live stream. Otherwise, I'll let Boris fire away. He'll talk about oil, all of the futures markets. And, go ahead, Boris.
Okay, let me see if I can grab. Hang on a second. Let me make sure that bear with me. Let me just make sure that I can share the screen properly. Screen share, hide. Okay, let's see if you guys are able to see me. Let me just make sure that I'm projecting myself on YouTube properly. Give me a second to see me. You guys see the NASDAQ and S&P now behind me, or no, on the screens?
Yes, we do.
Okay, all right, it should be coming in. Good morning, guys. Good morning. Good morning. So much fun last week with everything that we've done as far as trading goes. You know, Kathy's did such a great job summarizing all the fundamentals that there really is only just one market that people are asking about that I'm going to just summarize very quickly, and that's oil. Oil is sort of an interesting market right now because it's falling. I mean, oil is really, really, really falling. It's 68.2 today. I mean, which is remarkable. I was, to give you an idea of just the big decline in oil, I was in Jersey over the weekend. Jersey obviously is, of course, the lowest gasoline in the nation, but it's at $2.99. We broke the $3 per gallon mark in oil. And that's just, I think a symptom actually not of great things. It's a symptom of the fact that China has very, very little demand out there, that, we're basically pumping as much as we can in the US. And they're even talking about the fact that OPEC is going to have to curb production because, they just can't get prices up. All of this, I think, my fundamental view on the whole big macro situation is that we are on the precipice of recession. I know nobody believes this. Nobody thinks that there's a recession, that labor is all great. I think we've peaked. I think, jobs are going to become increasingly harder to find. I think wage growth is going to become a little bit harder to increase. And you're going to see sort of maybe perhaps a rolling recession in a lot of industries. Consumer demand on the lower end of the scale, this is the critical thing, the lower end of the scale, which is like the 50th percentage and lower, has really, really fallen off the cliff. If you look at Dollar General, if you look at all of the really steep discount stores, they've crumbled because that consumer is really suffering based upon the fact that their expenses have gone up and their income has not really budged. So to me, I'm not a bull on the macro situation, but it doesn't matter. It doesn't matter what my opinion is, as we all know. We don't trade my opinion. We trade market action. And as you can see, market action today is rock and rolling. It's, just straight up. We're almost up 100 basis points, almost 1% up on the day. We're going to get into our trades in just a bit. But what I wanted to do is I just wanted to review with you the techniques and the tactics of last week and how things have progressed. So first and foremost, if you look at my prop accounts, and by the way, of course, I put in the link here for our friends at Apex. Our friends at Apex still have the 80% discount, I believe. Be sure to take advantage of it. Specifically, the single best deal is the one that I'm trading. It's $50 for $250,000 account. Just simply go to the Apex website, choose a $250,000 account, put in our password. BK Safe, put in our discount BK Safe, and you will get that $50 hit. So I bought two. I actually recommend you buy 3 or 4. It's quite good. The reason I bought 2, and the reason I sort of like to buy them in batches, is because one of the tactics that we use that's very successful is we trade one account longs only, one account shorts only. And there's a couple of reasons to it. One is because, first of all, it helps us segregate the trades. 2, because sometimes you're transitioning from a long to a short and you want to be able sometimes to be on both sides of the market. And 3, because, and this is the most important reason, is because generally one side of the market is going to be dominant for a while and you want to have all the profits in that dominant side. So you can see, for example, the 41 account is the long account, started last week. It's now 254. So we're almost a third of the way. We just need 265 to get funded at $250,000. And the 42 account is the short account. It's just a little bit trailing us at around 243. It's actually the shorts. Remember on Friday there was a big decline. That short account really, really came up. And that's the beauty, by the way, of trading the 2 account approach. Longs in one account, shorts in the other. Is that when one side dominates, you're able to take many more trades in that one side. And really, create nice, really, very, very strong P&Ls. So as far as prop goes, it's been going great using all of the techniques that we use. We're specifically using this one particular instrument called one bar scalp, which everybody in my room has. All you have to do is simply join us. Let me give you the link again. If you want to just get this indicator, you can join us for a month. You can join my coaching. If you want to join my coaching, you'll get that for 3 months. Very, very useful indicator. And I'm actually going to make it better. Kay is always laughing at me because I'm never satisfied with all my stuff. But this isn't going to be a change in techniques or change in practice. It's just going to be a cosmetic change, because I was watching Market Wizard, a good friend of mine, Linda Rashke, who I've had on many of our Trader Fests. And she was using, a different indicator, but she was using like little red dots, green dots to mark the entry points. I thought that was very, very cool in terms of understanding intuitively where you want to be putting your entries. So I'm just going to simply create those things. In addition to which, because remember, this indicator that we have right now, which is, can provide us with 3 ways to trade. Momentum, let me show you just sort of all the ways. We can do momentum trades here. We can do retrace trades here, and we can do turn trades. And by creating this new look, which I'm going to have for everybody by tomorrow, I'll demonstrate it in live trading. It's going to be even easier to intuitively understand which trades you want to do. Now, when we're doing live trading, all we're doing is momentum trades, because we're keeping it very, very simple. Momentum trades alone have been, put us in the money all week long. Always, helped us fund all of these trades really, really well. As you all know, I already have 4 funded accounts, right? 2 of them I'm just basically holding here in reserve, and what we're working on right now is to get the $250,000 accounts funded, get hopefully both of them funded, and then we're going to be able to maybe end of September, middle of September, beginning of October, we're going to just trade funded accounts, and it's going to be a whole new ride of us trying to get paid out. Many users on my group are already getting paid out. There was William. I'm going to just use his name. I'm not going to use his last name, but he just posted that he got paid out $3,000 last Friday. Awesome. I love it. I love the fact that, remember, the reason I trade live is not to show you how well I do. It's to help you make sure how well you do. Nothing makes me happier than everybody in my room passing 1,000 prop accounts and getting funded and making 10 times more money than I'm doing right now, because that is what it's all about. It doesn't matter how much money I make. The only thing that matters is how much money you make. And hopefully using these techniques, you guys can do very well. Now, there's lots of you guys over here who are not necessarily trading prop or trading futures. We all know this. Many of you like to trade CFDs and forex. So the other thing that we started when I came back from Labor Day at the beginning of the fall is my whole automated product session, which I want to show you because we've had a really, really good run with that so far. We call it my ODP system, once a day profit system. Let me show you. Hang on a second. I just got to go find it. Here's these trades are fully automatic. So it's an algo that I wrote, MT5, MT4, that trades these trades in gold, in DAX, in US 30, and in NASDAQ. And it's 1 winning trade per day. That's the strategy. I'm going to do a whole webinar on how this whole strategy works, but I just wanted to share with you how well the algo has been doing since the beginning of September. Now, every single trade that the algo runs, we posted live in our Discord. So another good reason for you guys if you want to join us in Discord. But here's what I want to show you. This is the results just from September 1. So basically right after Labor Day, we made $2,442 running these trades. Like right now, today, I'm flat on gold. Let me see if the German is done. German has not triggered yet, and we're going to be waiting for NASDAQ and US 30 because they're armed to go at 10 o'clock, right? So I'll tell you tomorrow how the runs go. But as you can see, the algo fully auto trades everything itself. It's my little baby. I absolutely love it, and its performance has been nothing short of extraordinary. And I hope to keep it this way. The whole function of this particular algo is to be super accurate. It's not about making lots of money on one trade. It's small amounts of money, 10, 20, 30, 50, 100 trades at a time. And you can see, as long as you keep it tight and you have a very, very intelligent risk risk resolution strategy, which is really what this is all about. It's about a risk resolution strategy. You're able to really P&L some very, very impressive numbers. This is just the first week of September. Hopefully we'll keep going, but that is my ODP. If you're interested at all in that strategy, there's two ways to get it. One way is literally free. If you are not a US customer, you can actually join our friends at ACAP. Open an account with ACAP, deposit $5,000. This strategy, yours, totally. Like you get the full algo, you get to trade it. I'll walk you through all the rules and regulations, and it'll be done. If you're a U.S. customer, you just simply have to go to this website, and you can actually purchase it. So whether you want to purchase it or whether you want to get it for free by funding your account, either way, totally works for you. Okay, so we've had very, very good weeks both on our funded accounts, on our prop accounts, and my algo accounts. I'm hoping, I can't promise this 100%. I have to speak to Kathy just to make sure that we're synced up on logistics. But ideally, I would love nothing more than Thursday night, 7 o'clock New York time, which will be a little bit late for it'll be morning for Asia. It'll be a little bit late for Europe. Is I'm going to do a webinar on the basic rules and configurations of how the ODP strategy works. It comes also with a Trading View indicator, by the way, so you can watch it on Trading View indicator. And it'll be recorded. And we're going to broadcast it live on YouTube. So if I can arrange all of that, that'll be fine. It's just that this is a very, very busy week because we obviously have CPI on Wednesday. We're going to trade that live with you. That's going to be awesome. I'll post the links, obviously, soon on that. Then we have FOMC in the afternoon on Thursday. We're going to trade that live with you. So I'm going to go absolutely nuts with you this week in terms of live event trading. I hope you guys are all going to be joining me. I hope you tell every one of your friends. It's totally free, as you can see. We show everything we do, good, bad, and ugly, all the P&Ls. Please join me if you like it. All of that, information is going to be put up on YouTube in just a second. If you want to 100% be certain to know when all the live trading is going to happen, when all of this, all of these techniques are going to be disclosed, absolutely hit the subscribe button. If you subscribe to the channel, it will tell you right away when we're going to be going live, and get all your friends to subscribe too, because I'd love to see as many people as possible do this. It's both MT4 and MT5, and yes, we have the ODP is an MT4, MT5 product, so we have both sets. What is my forecast for NASDAQ this week with the Echo data, please? I have no friggin' idea, and neither does anybody else, my friend. Okay, it's useless to forecast this week because nobody knows what the data is going to be like, and nobody knows how the market is going to react to when the data happens, which is why we don't trade our opinions, we trade market action. Okay, that's how we trade. So I'm happy to give you an opinion and then laugh at it in the same minute. The best opinion I can ever give you is this old broker at Bear Stearns, who I used to work with when I was very, very young, and he used to have this statement. He used to go, the market will go up or down unless it stays the same. That's my opinion about how NASDAQ is going to happen. It doesn't matter what my opinion is, okay? What matters is how I'm going to trade what's on the chart. So speaking of that, let's get to the charts, right? Let's go look around. Let's see what we got here on everything that's going on here. So we actually have, what time is it? Oh, it's 9:30. We're posted. Oh, it's NYPD. It's time to listen to the sirens. I have a momentum up trade here forming in S&P. So far, the signal goes away. I have a true momentum upside. I just missed it already. Sorry. In NASDAQ. So I have to give that one up. That was just pure profit right there. S&P has got 35 seconds for us to take this trade, to wait for this trade before we can commit to the trade. So that looks like it's not going to be happening. But yeah, we right now all the trades are skewed to the upside. So okay, we got 16, 17 seconds. Let's go to Trade Evade. Time for me to put on my glasses, right? And we're going to go 8, 9 seconds left. Does this candle hold? It doesn't look like it's holding very well. I'm not trading it. Nope. See, look at that. Went red. No, not a trade. Not a trade. Fake me out. This is why we wait for the candle to complete before we commit. But if I committed over here at 55, this was a nice easy trade straight up. So I just missed the NASDAQ. Generally, as I said to you guys, the way we want to trade is the only thing that my strategy requires when I'm scalping all of these trades is focus. The signals are awesome, but you snooze, you lose. So if you miss the signal, the only thing you can do is not take it, not chase it, right? Number one rule of my life, which I break all the time, and by the way, that's, do as I say, not as I do, is if I haven't taken the signal at its given time, I just have to wait for the next one. So one of the things that kind of, school is back. So I got to take my daughter to school, and I'm out of like my summer mode when I could just really, really look at the screen all the time. And I realized something really, really important. So I cannot, and neither can you, make breakfast, get yourself an espresso, pack your kid's bag for the day, and scalp NASDAQ. You can't do that. You cannot do that with my approach. You have to either do all that stuff and then say, okay, now I'm going to do a half-hour hard focus on this, or don't do it at all. Right now, I'm actually getting a negative M in NASDAQ. 24 seconds left. Let's see if that now doesn't hold. Doesn't hold. So we'll actually, you know what we're going to do? We're going to go to the, if it's a negative sell. I want to be in the, I'm in the 42. I'm in my sell account. Okay, let me see what we got here. Nothing much going on, no signals. But again, my point is, the beauty of this strategy is it's going to yield you profits consistently. The cost of this is that you got to focus. Like, a lot of people like writing, Boris, I love this, but I'm working and I'm doing some stuff, and I agree. You can't be doing a conference call trying to scalp this thing. Give yourself half an hour. I'm going to just, I'm going to trade the New York Open. If you're in Asia, it's beautiful. You're done with work. You have like that hour or two at nighttime, just hardcore. If you're in Europe, take your lunchtime. Just say, I'm in fucking lunch. Do not bother me. An hour. You give yourself an hour. It's pretty clean, clear $500-$600 of scalping in all these trades. But just focus. This is sort of like the only realization I had as I came back to real life. That if you want to make this successful, we just got to be, focusing. You can see even when I'm talking and I'm kind of just explaining stuff, but I'm not focusing on the screen, I'll miss signals. And now, when I miss signals, I'm not chasing them. I'm not freaking chasing them unless I get the setup. I'm not taking them because I'm really going to try to practice what I preach here with you guys. So any questions for me before we kind of start? Anything else that's going on here? How's everybody doing? How's everybody's? Anybody trade overnight? How's your trading been going? Now, let me ask you this. Let's do a poll right now. Let's have a fun time poll. Let's do a poll here. I want to ask you: was last week positive? I'm actually curious. Yes or no? Very simple poll. Let's do this poll. Let me know what you guys. How was it? How was it for you last week? I'm not using bounce these days because ODP, who's this? Sorry guys, I got to put my glasses on. I know Vanity is going to ad box. I'm not using bounce these days because ODP is actually bounce on steroids. Okay, it's like a 20th version of bounce in all its permutations. That's on steroids. So yeah, that's it's not that bounce is not good, but I just I really like the new strategy. That's why I've sort of left bounce. And the scalper, we got a green signal. 35 seconds left in NASDAQ. So watching NASDAQ right now. 31 seconds left on NASDAQ. So at around 20 seconds, I'll transfer over to my trading platform and see if this candle holds and if it's going to be a chance for us to trade. Okay, I got to go to the long side. So that means this is a long side. I got to go to the 41 account. 41 account. NASDAQ, is it holding? Barely. 6, 7, nope, does not hold. And we are not touching it. Not a trade. Boom. See, that's the key thing. Just focus on the signal. You get the signal, commit. You don't get the signal, let it go. So right now we're just kind of chopping around. I'll let it go, no problem. Do I trade spot gold as well as gold futures? Gold, I trade only on my algo. Not that I can't trade gold using this strategy. Again, the key to success in this strategy is focus. Focus by its very definition means you have to strip away anything and everything that can interfere with it. I can only focus, honestly, really, ideally, you only want to be trading NASDAQ. But I'm giving everybody like NASDAQ and the S&P to give us a couple more choices for trades. So if I put gold in there, it becomes just a complete nightmare. I can't focus. I can only focus on two things. It's not a function that I can't do. I could trade gold exclusively. And that would be, that would be a fun thing. Maybe one, maybe we'll do a live trade on gold exclusively here. But other than that, no, I'm not going to do it. I could trade right now. Was that my short accounts, right? 41, 40, 42. Where's my S&P? All right, I'm gonna let it go. This there was a sell in the S&P over here, the M cell. Which I probably could have taken this, but I was late on the trade, and I didn't want to take it. I actually should have probably taken it right now, but it's fine. I'll let it go. I'm still looking for a clean, crisp signal here that I can commit to right now. The signal would have been 460, went up 62. This would have worked. I'm sorry, guys. I should have committed to the signal, but let's see if we get an M signal here. The beauty of this thing is, and here's the thing, stop losses for my trades are, as always, 1 to 4. One point target for 4 point loss. Very, very negative stop risk reward ratios, because we try to hit 90% accuracy. Here's my okay. Just trust me on this. I'll show you later. I really want to focus on trades. If you want to talk technique, we'll talk technique after we're kind of done trading. This is like, I realized that if I want to trade, I'm going to trade. If I want to talk technique, we're going to talk technique. So you're welcome to ask me all the technique questions. I'm just going to ignore them in explaining them to you, and I'm just going to focus on trades until I'm done, and then we'll do technique, because I'll show you exactly why I do negative risk rewards. Okay, possible negative M here. 9-10 seconds left. Let's go to Trade Evade. I want to go to the 42 account. NASDAQ, is it negative? Nope, it's positive. Did not hold. Wow. Oh no, it was negative here. All right, you know what? Hang on. That's a legit trade. We're going to sell market. $100. See how I committed to it? If you commit, boom, done. So that was $100 right then and there in half a second left, because I saw this gave me an M. I thought it wasn't an M. Gave me an M. The moment I saw it, I took it. I took it hard. Boom. Super fast trade our way. Now I'm getting a long signal on the S&P. Right? S&P is kind of going against NASDAQ. I don't like when the indices go the opposite way, but I'll respect this M signal if it holds. So we're going to go back to the S&P. We're going to go to my long account, which is the 41 account. We're going to go to the ES, and if this thing is staying, no, it's not green. It's not green. Let's see. Nope. 4, 3, 2 seconds. Not a green M. No trade. I haven't committed. So, okay, great. I made the commitment that was the correct commitment. We'll let everything else run, and then we'll see what the next trade goes. Everybody following me? Yes, no? Oh, look at this. 61% of you had a positive week. That is so good. I love it. I love it. I want this to be 80 for everybody. This is the whole idea. This is why I love trading, guys, because in our room, only 5% of Joe Blows that come off the street ever get funded using a prop account. Only 5%, right? Like, the industry rules are really, really hard. It's harder to get into to get funded on prop than it is to get into an Ivy League school. Which, by the way, these days, fuck them all. I say this as a Columbia University graduate. But let's see if you guys can guess, just in chat, how many of my coaching clients, my PTP traders pass the prop? I just did the numbers over the weekend. What is the percentage of people who take our coaching, use our tools, use our techniques, use our strategies? What's the percentage of those that pass? I have a green signal in the S&P with 42 seconds left. Let's see if this does me anything good. So we're going to go to the long account. 41 is the long count. S&P 29 seconds left. Let's see if this holds. Anybody want to put in there? If you guess correctly, I'll give you access for a month. I'll give you a free access for a month. Let's see if you guys can guess within a couple of percentage points. Let me see some chats in there. 8-9 seconds left. So I'm going to commit to this. Boom. Ooh, geez. Big pop. Wow, that was a big pop. Is there a 10 o'clock? No. Sorry. This is just a tough execution on me. I committed to this at the top of the candle. This is one of those trades I could very easily lose. I could be right on the trade and still lose on the account. Let me see, where am I? Because although I'm at session highs, mainly because the candle itself is so large. When you buy super high and I'm just going to eat this up probably because my execution was just horrible. This was just simply bad luck. The whole trade literally popped on me at the end of this candle. So I wouldn't have taken this candle if I saw it was going to be that big. What you want to do in a perfect world is take a nice tight little candle, because then you have lots of room for explosion. Once you have the candle itself here is literally, which is very huge, 68, 7 points on the S&P. That's like usually sometimes half an hour's work of the S&P, and it was less than 1 minute. So when you have that, you have a natural retrace movement, and the thing naturally comes back down. So this thing could still go high and make fresh highs, and I could get stopped out on this trade. And it's just, nature of the beast. You have to accept that sometimes that happens. But sometimes I can get lucky, and maybe it goes back up. You know what? I'm going to get out. Okay, I just and now I'm probably going to hit my target. The reason why I got out of this is because, remember, I'm trading with a very negative risk reward ratio. If this was going to stop me out, it's going to be a lot of work for me to get that P&L back. And I already knew that this was not ideal. Look at this. The reason why it wasn't ideal is because you have to obviously apply a little bit of experience and judgment. That when you have a massively large candle and you're buying at the high, you are effectively putting yourself over the skis. And that was just such a negative piece that it put me in a bad stead. It actually, by the way, why the fuck is this not? This is really interesting. Why did this M go away too? That was interesting. All right. The NASDAQ trade also popped up. The NASDAQ trade we could have actually gotten P&L because there was much better momentum. With NASDAQ, when you have a large candle, you have a lot more confidence that it can go forward. And that's a function of understanding how the instrument works. NASDAQ is such a strong momentum instrument that even if you have a strong move in NASDAQ, you have some continuation. With S&P, it's much more of a retrace instrument. So it's going to take a little bit of profit naturally before it comes back up. So fine. We got out unscathed, which is just as good as winning in my game. And now we're just going to wait patiently for the next momentum signal to the upside. All right, guys, come on. Stephen is saying 92. Okay. Stephen is saying 92. Gordon is saying 75. Stephen is saying 100%. No. I would love to say it's 100%. Gladys is saying 75. Honestly, John Kennedy, who's just said 70%, you're right on the money. That's the figure, which is literally 5 or 6 times, 5x or 6x the average ratio of like regular people who don't have the tools, don't have the strategies. So if you like it, feel free to come join us here. Let me put the link in here. And since John Kennedy already has access to all of my stuff, maybe what I'll do is, John, you email me and I'll show you. You can take a look at all of our courses, and I'll give you one of our courses for free, since you are the closest to guessing this. But yeah, 70% versus 5%. That's a function. That's really not a function of anything, how bright I am at all. It's just a function of really good collegiate atmosphere, having great tools, and then people using those tools to their own personality and ability. I'm a huge believer that the best way to trade is to take my ideas and make them your own. And when people make them their own, they kill it. They're killing it. We just had a new, just over the weekend, somebody posted in the room, right? A new person, Gwyn, got funded, over the weekend, which is just great. I mean, I love people getting funded. You got to get a $25,000 account, trading small, did a great job. So if you're interested in trading profits, there's no other place in the world where $50 can buy you access to $150,000 worth of notional capital. Just no other place in the world. That's what makes it so cool. That's why I'm so excited. That's why I think it's the trading business of the future. So if you're interested, come join us. Get some Apex accounts. Have fun. Here's the link to Apex. Still waiting to see if I get any more signals. Markets really unbelievable, man. Markets just are not quitting, right? Just popping. They just refuse to go down. So we'll stay patient a little bit here. We'll catch a few moves. Tomorrow we're going to go now to kind of my favorite way of trading. We're going to trade the golden hour. We're going to start 9:30. We're going to go all the way to 11, right? The golden hour is the 10 to 11 hour. That's my favorite hour to trade. So we're going to do that tomorrow. On Wednesday, it's CPI day. So I'm going to probably corral Kay. I don't know if she wants to come in, but if she wants to come in, she does a great job of trading FX off the data. And then after that, we're just going to trade. I'm just going to trade hardcore for 2 hours with you, 8:30 to like probably 10:30, 11 o'clock. We'll just take our time, pick our spots, and trade that. And then Thursday, obviously, Mr. Powell and FOMC, we're going to do that as well. Also, tomorrow obviously is a debate. That's going to be it's going to be actually Wednesday morning. Think about this. We're going to have the post-debate hangover and CPI data. So it could be really, really a lot of fun as far as trading goes. So we'll have to see. Otherwise, we're just chilling right now. Not much on the tape, because I'm just, I have clearly an upward bias, but I just don't have any signals here to make that trade happen. I'm wondering, did I actually, if I did not wimp out, let me see what I've gotten stopped out. I was long 68. I would have survived the 64s. I needed to go. Yeah, look at that. I would have actually survived the stop. Very, very hairy stop. Would have been just almost, taking me out. But I would have made target. Okay, NASDAQ is showing me long AM trade over here. 34 seconds left. Let's go to see if we can pick up NASDAQ here. 41. Let's go to NASDAQ. 25 seconds left. Let's see. We got a NASDAQ. Oh, I want to make sure NASDAQ is at 1. 16 seconds left. 15 seconds. I'm staying very patient. I know that now we're hitting fresh highs. You really want to chase this thing, but we're just going to stay very, very patient here. 6, 7 seconds left. At around 3, I'm going to start buying. All right, my target is 98.50. 98.50 is my target. Let's see if I can survive this big push on NASDAQ. Come on, baby. Hit the 700. I was hoping we can run the 700, the round numbers, because I'm right in front of that. But we might not be able to. We'll see. We'll have to be very patient. So one of the cool things with you guys hanging out with me now, and you're kind of getting comfortable with my trade setups, I'm going to start showing you this week some of the more advanced tactics of the question is, what happens if you get stopped out. Of course I get stopped out. I get stopped out every day, at least 2 or 3 times, right? So how do I manage, my stop outs? And there's a couple of different ways to do this. I may get stopped out on this one. There's a couple of different ways of tactics to do this. And I'm going to just, discuss them with you. We're probably going to do the much more conservative approach, because one of the things that I want to make sure is that you guys don't do the aggressive stuff with me. That really requires, I got stopped. So we ate the loss on this one. So now that we ate the loss, like what would be the repair approach? How do we try to repair this trade so that we can recover the losses and obviously go towards positive P&L as we go forward? And the answer is twofold. What I do personally, which is very, very aggressive, is I will literally reverse the trade. Like, in other words, if this dropped me out, like if this was a stop and it kind of dropped me out, I would go 4 large, right? Not 1 large, but 4 large, and go short and let it go down the other way. Now, that's a very, very aggressive approach, and I definitely don't recommend doing it when you're starting out this thing, because if you're wrong, then you're going to eat a whole day's worth of P&L. You're going to have to it's going to take you probably a day or two to come back to the original level you were at today. So unless you're really, really confident that the momentum, reversed, I wouldn't do this. There's actually 3 approaches. One of them is to say, screw it. I ate the loss. I'm going to trade 4 winners, and I'll make up the winner, and that's it. Or maybe today, the highs are going to peak out, and it's all going to be the longs. I'm just going to try to make money on the shorts. I'm trying to make money on the shorts. That's, I think, a very, very legitimate, easy, intelligent way. I'm more modest, like kind of a Solomonic compromise between the very aggressive approach that I have and the sort of like the passive, let me just, let it run. And by the way, just kind of let you know, what would I have done is, I got stopped over here. I would have probably gotten short here at around the 77s, right? And I'm targeting 72s. So I probably would have been able to resolve it over here. But if you don't get it resolved, then you eat really a day's worth of losses. It's a big loss. But that's not something that I recommend doing from the start. What is it? I think a decent Solomonic compromise is the next signal, just double your size, because it's rare that you're going to have 2 consecutive negative losing signals, right? So if I get one more M, green M to the upside, maybe I'll go twice large. Now that's not going to repair my full minus 400, but it's going to repair half of it, and then I can do that maybe one more time, and then I'm back to even on the long sides, right? In the meantime, all my shorts are made money. Can I show the indicator? This is the indicator. We're looking at the indicator. It's you see how it's giving me these signals, M's, momentum, buy sells. This is called the scalper 1.0. It's the indicator that I wrote. We do have a long entry in the S&P here, 43 seconds left. Oh, and a long entry here. So let's focus on NASDAQ, because NASDAQ is where we were before. So now we're going to go, I'm going to do the Solomonic compromise. We're going to do two largest. I'm waiting for the candle to complete. Again, you want it to complete. Hopefully, it doesn't extend too much, and we have a chance here to hit the highs. It's making a second run towards session highs. Hopefully, this will be a good run. 8-9 seconds left. At around 5 seconds, I'm going to start to position myself into this trade. Okay. And now my take profit. Oh, did I take 2 of them? Oh, I took 2 of them. Shit. Okay. Fuck. Sorry. Let me start again. I'm going to buy market. Okay. 2. And my limit will be 95s. Sorry, I took 4s. And this thing is really chopping me around. Today, maybe the longs are not going to work for me again. And if they don't, the advantage of taking a smaller size here instead of just really, really getting large was that, again, I'm not bleeding too much. I'm only going to be down like 1,000. I started 254. I came back down to 253. I'll probably be able to get it back up. In the meantime, my short one, which started at 253 at the beginning of the day, now is almost 254. And that's the beauty of working both sides of the market, right? Just sort of letting you trade one side that's going to be dominant. This clearly the short side. The short side is the dominant side now. Now do we have short signals coming up? Yes, we do. So now I have the short signal coming up in NASDAQ, and we're going to trade. I'm going to trade the short signal right now. So this is the short side, which is the 42 account. 38 seconds, 39 seconds left. I'm going to start with one. Let's make sure that I need the signal to hold. $22 seconds. Let's see if the shorts hold. Still a short signal, 18 seconds, 15 seconds. As long as this candle stays red, we're going to take the shorts. Okay. So we short now, take profit is 64. And you see the short now. The short side is almost 254, so almost up 1,000 on the short side, because the short side is trading a little bit better now. And that's the beauty, as I said, of trading both sides of the market. One, you're not emotionally attached to like, oh my God, I'm bleeding money in my account, because who cares? I could lose money in the long account, make money on the short account. I'm fine. At the end of the day, this is the final thing that I wanted to kind of share with you today. This is a really, really good psychological exercise for everybody to practice on. So I have an 11-year-old. She's never learned how to ride a bike. I know that, fault me for parenting. This is, second generation child. So the first one that I taught early. So what was interesting is, she took some lessons. We went out, we were in Jersey over the weekend. She went on a bike, and, the guy got her to kind of more or less balance, but she was really kind of wobbling around. Went to the local elementary school around my neighborhood, and I had her get on the bike. And instead of just me talking about, you got to pedal, you got to this, I said, see that door over there? Just ride towards the door. Just keep your focus on the door, right? And then she rode it beautifully, rode it up there. Then she stopped. I said, okay, now ride towards the trash can, right? And it was like about maybe 400 yards of biking. And after about 10 of these, backs and forth, she was completely perfect on the bike. Now, why was she perfect on the bike? Because she wasn't thinking about her balance. She wasn't thinking about pedaling. She wasn't thinking about anything but the target. She kept her eye on the target, right? And that allowed her to basically relax and do the correct thing, right? So what's the, point I'm trying to make here is separating the longs and the shorts helps you keep an eye on the target. What's the target? What's the target? The target isn't, to win this trade. The target is to get an account funded. That's what we're working on, right? Even if I burn one account, but I fund the other account, isn't that the target? Isn't that what we're all trying to do, right? Isn't that the actual essence of this? And then when I trade the fund, that's why I'm trading two sides on the funded as well. When I go to the funded, I'm going to have the longs and the shorts, because what's the target then? The target is to get a payout. So who gives a shit if you lost one funded account, but you got paid out on the other one, right? Who cares? It's $3,000 against a $100 fee, So that is the essence of how I think psychologically this really, really helps, right? Really, really helps you to do that. When does a mentorship begin? So, Stephen, thank you. I did not pay you money to ask that question, but the answer to that is actually the fall season is starting tomorrow. Here's the link for the thing for you to sign up, and I'm actually going to be sending out the coaching stuff tonight. So we are starting. It's every Tuesday, 7 p.m. New York time. Everything is recorded, so if you miss the sessions, you can always watch it on demand. A lot of people in Europe do it because it's a little bit late for them. But yeah, we're going to be starting. The fall season starts tomorrow. So great time to join if you want to join me for Pass the Prop. Oh, let's look a look. Do we have any more signals? I feel like we might have another M signal coming up here. We have another M signal coming up. 11 seconds left. Come, baby. Come, baby. I need to go to 41s. 41. Nope. Well, hold on. No, all right. I cheated a little bit, but let's see if if the gods are kind to me today. This wasn't really an M signal, but I kind of just cheated myself. This was a flat signal, but I was like, okay, oh, thank you very much, and we win again, and we win again, and we win again. Thank you. And that's how you get it back. You just So now the long if end of the day I'm up 2,000 on the short side and flat on the long side, great. I'm perfectly happy. I'm gonna be up on the long side. I'm telling you this. I guarantee nothing, but I'm confident that I will be, because once the longs start taking shape, I could have resolved this to break even on a couple of these trades. I just didn't want to show you like my worst habits or my most advanced or my advanced taking techniques, because I didn't want you guys to over leverage your accounts. But I'm very, very confident that this took basically what happened here is there were 3 up waves and the third one broke to fresh highs, right? So we failed on the first 2, the third one worked higher. So that's that's all it is. Dr. D, good morning. I signed up for the course tomorrow, but I did not get an invite. Which course tomorrow? Oh, it's coming. It's not instantaneous. I'm going to be sending it out a little bit later today. Okay. So if you signed up, don't worry about it. Everybody who signed up for Pass the Prop is going to get the link. I'm also going to post it in Discord, so you guys can get it there as well. So don't worry about it. And if you have any issues, just simply email me and I'll send it to you. If you haven't gotten it. 7 p.m. East Coast, New York time. Correct. 7 p.m. New York time. Look at that pop, though. What a nice pop. So, hopefully you guys got a good feel and a vibe for how things are going to develop this week. Actually, you know what? Let's check while we're doing this. One last check. Let's see if my algo's done anything. German is still working, and NASDAQ and US 30 are ready to be armed. So okay, so we'll update you tomorrow on how the algo is working. In the meantime, all the signals are starting to pop. I'm going to redo this for you guys tomorrow with like nice, really clean dots, so you can actually see the dots on momentum trades and turn trades, and we'll have a good time. Oh. You want to have a fun time? Oh, what we can do here? Okay, one last thing. Do I have a turn trade here? I think we had such a big move up to the upside. I think we can actually take a turn trade, right? Yes, we have a turn trade coming up. Let's have fun. So the turn trade is going to be to the short side. We don't usually do turn trades, but let's do a turn trade here. It's NASDAQ. Let's do the turn trade. Okay, so market. Is this my short side? Yeah, okay. Okay, so why am I doing a turn trade? We only do a turn trade when we've had massive, massive move to the upside, like 100-point move to the upside. We've had a move from 18,600 to 18,700, and the turn trade works, and we're at 254 on the short side now, right? So full $1,000 on the short side, started 253. That's what I'm talking about, right? The long side, I'm gonna nurse back up to break even, and now we're hopefully a third of the way on both sides, right? The game plan is, if I can do this right, guys, I'm gonna get both of these $250,000 accounts funded, and then we're gonna go live to live trading. Okay. Somebody's saying, yeah, I will. In coaching, Dr. D, I'm going to show you how to configure the arrows and everything else, because I don't want to bore people with the configurations. But yeah, I'll show you guys how to do this. As a matter of fact, by the time we have coaching tomorrow, I'll have the brand new version with the dots, and a lot of the configure, like the little UI stuff, hopefully will go away as a nuisance. And it'll be a lot easier to see all this stuff. Anyways, did we have fun today? Was it fun to trade? We did about, at least 9-10 trades today. And I got stopped out. I ate my losses today. And I'm still up on one of my accounts, right? That's what I'm talking about. I took it like a big boy, and I'm still up. Cool. All right. Tell everybody, please. I want to see everybody in the room tomorrow for live trade, and obviously this week is going to be awesome, right? We're going to have a huge amount of volatility. I mean, the thing that's really, really cool about all of this, guys, is we're living in the golden times. We want 100, 200, 300 point moves in NASDAQ. That means we have 20 to 30. If I'm focused and I have a couple of hours and Kate leaves me the fuck alone for like a couple of hours so I could trade, it's just money in the bank. Really, you can just clip, $100 trades all the time. So that's what's so beautiful about this approach. If you just give yourself like an hour of trading. All right. Thank you guys. Somebody wanted to know my winning trade. So let's take a look at the here. Where's my okay, let's look at the report. Okay, so here's the report. What's today? This is today's 100% winning trades on the short side, right? Just completely. But let's look at the short side last week. Okay, what's today? Today's the 9th. Let's go from all right, let's go September. Let's just the month of September. Go. Okay, so that's a really, really good, good clean. I'm doing a good job here. 87 to 12, right? I mean, anytime I'm above 75, I'm in good shape. But 87 to 12 is pretty good resolution on all this stuff. As far as as the long side goes, I think the long side isn't going to be as pretty. Let's take a look at the long side. Same idea. We're going to give ourselves the full month of September as the long side. So now, because today obviously we got a little bit clipped. So this one, this got a little bit weaker, 73.22, but still, still alive, 2,800. Let's get this back up to 4,000. I'll be in good shape. The key thing is what you see is even if I'm, you see the P&L. This is especially with fees. You see this, the curve with P&L fees. It's basically up. Today was just, a little bit of a crash. But whenever you have the crash, it's a limited crash, right? It's a limited crash, and then you're hoping to come back up. That's the equity curve that you want. You want to just contain your losses. Remember, I have a $6,500 drawdown budget, and the worst I ever got was $810. So that's good. I want to be. That's where I want to be. I want to be tight on my losses. So hopefully that that answers your question. What else? I think that's it. Those are the last of my questions. All right. So last shot for all the links. You guys want the ODP? ODP right here. If you want to. If you're a U.S. customer, you need this. You need this link, the U.S. link for ODP. If you want Apex, here's my links for Apex. And if you want the coaching, which restarts tomorrow, here's the link to coaching. Okay, so we should all be in good shape. Back in the city. I'm very excited to be back in the city. I'll be trading with you guys tomorrow. We're going to start 9:30 to hopefully 11 o'clock. All right, everybody enjoy. So much fun. I'll see you guys tomorrow. Have an absolutely great day. Take care, guys.